Now, demand for and access to capital to build and grow businesses is a key obstacle for many enterprises in sub-Saharan Africa. While private equity activity has grown across the continent, entrepreneurs still maintain that it's nowhere near its full potential. Now, Ramah Nyang filed this report from the WCA Conference currently taking place in Addis Ababa.
For many private equity funds right across Africa, pension funds are, at best, a niche source of funding. In 2014, for example, there were over $400 billion worth of assets under management across sub-Saharan Africa, but only 14% of that was actually outside South Africa. As Diana Gishaga from P&L told me, that is only where the problems begin.
By the very nature, pension fund is about saving and saving for retirement. And so the key things in a regulator's mind is ensuring that by the time the pensioners are reaching retirement age, they are able to access these funds and they are able to ensure that they can live a certain quality of life after their retirement. So you find that regulators are very careful or cautious about where these monies can be put. But one of the things they've realized is, I think, having a look at what is happening or what has happened in maybe the developed worlds, the pension sector and even the insurance sector, for example, life insurance funds, played a very critical part in growing the alternative asset segment. So they were the first who lent long-term capital and enabled the alternative asset industry to reach where it is.
Nonetheless, there have been some successes. In October 2015, for example, Ascent Capital, a Kenya-based private equity fund, managed to convince two private pension funds in that country to give it $80 million worth of capital. At the same time, in that particular country, the Retirement Benefits Authority also changed the rules around where pension funds can park their money. Private equity is now a legal option for them. It wasn't before. However, it's one thing to find capital. As Vimal Shah, the CEO of Bidco, told me, is another thing entirely to find patient capital.
We get approached by a lot of these PE funds and private equity funds trying to look for investments. We're very attractive for that. But when I speak to all these PE funds, the problem with them is they also have a short-term strategy, because they're all either 5 years or 3 years to 5 years or 7 years. Yeah. They want to buy you cheap at a low PE ratio or a low EBITDA levels, and they want to sell you in 5-7 years to somebody at a very high multiple. Now that, if they can do, why can't we do that? There's a lot more patient capital available in the world today. There's a lot more capital that is long-term, not looking at exits. And therefore, I think the PE fund model will have to change. They've always gone for short-term, very high returns. And that's what I call a harvester mentality. We need planters to come in with us. And once planters come in with us in the long haul, we're long-term players.
These are just a handful of some of the challenges entrepreneurs across Africa continue to grapple with in the search for money to grow and nurture their businesses across the board, not to mention the cost of capital, or if you're on the PE fund side of the equation, a very limited number of exits when you need to book those capital gains. Nonetheless, the search for answers still continues. In Addis Ababa, I'm Ramah Nyang.